Auto insurance. When you buy or lease a car, it's important to protect that investment. Getting auto insurance can offer reassurance in case you are involved in an accident or the vehicle is stolen, vandalized, or damaged by a natural disaster. Instead of paying out of pocket for auto accident, people pay annual premium to an auto insurance company. The company then pays all or most of the costs associated with an auto accident or other vehicle damage. What is car insurance? Car insurance is effectively a contract between yourself and an insurance company in which you agree to pay premiums in exchange for protection against financial losses stemming from an accident or other damage to the vehicle. Auto insurance can offer coverage for vehicle damage, including your car or another driver's vehicle, property damage or bodily injuries caused by an accident, medical bills and/or funeral expenses associated with injuries sustained in an accident. The exact details of what coverage depend on the minimum coverage requirement for your state and any additional coverage option you choose to include. Every state except New Hampshire requires drivers to have a minimum amount of bodily injury liability coverage and property damage liability coverage. Failing to obtain the minimum car insurance required by the laws in your state could result in a suspension of your license, fines, or even jail time for repeat offense. Auto insurance costs. There are two primary costs associated with purchasing car insurance: premiums and deductibles. Auto insurance premiums vary depending on age, gender, years of driving experience, accident and moving violation history, and other factors. Again, most states mandate a minimum amount of auto insurance. That minimum varies by state, but many people purchase additional insurance to protect themselves further. Additionally, if you are financing a car, the lender may stipulate that you carry certain type of car insurance. For instance, you may need gap insurance if you are purchasing an expensive vehicle that will likely depreciate very quickly once you drive it off the lot. Gap insurance can help to pay off the difference between the vehicle's value and what you still owe on it if you are involved in an accident. A poor driving record or the desire for complete coverage will lead to higher premium. However, you can reduce your premium by agreeing to take on more risk, which means increasing your deductible. Your deductible is the amount you have to pay when filing a claim before the insurance company will pay out anything to you for damage. So, for example, your policy may have a 500,000 or 100,000 deductible. Agreeing to a higher deductible can result in a lower premium, but you would have to be reasonably sure you could cover the higher amount if you need to file a claim. Ask your insurance company about ways you may be able to lower your car insurance rate, such as getting a safe driving discount or taking a defensive driving course. How auto insurance works. In exchange for premium paying, the insurance company agrees to pay your losses as outlined in your policy. Policies are priced individually to let you customize coverage amount to suit your exact needs and budget. Policy terms are usually 6 or 12-month time frames and are renewable. An insurer will notify a customer when it's time to renew the policy and pay another premium. Regardless of whether they mandate having a minimum amount of auto insurance, nearly every state requires car owners to carry bodily injury liability, which covers costs associated with injuries or death that you or another driver caused while driving your car. They may also require property damage liability, which reimburses others for damage that you or another driver operating your car causes to another vehicle or other property. A number of states go a step further, mandating car owners carry medical payment or personal injury protection (PIP), which reimburse medical expenses for injuries sustained by you or your passenger. It will also cover lost wage and other related expenses. Uninsured motorist coverage reimburses you when an accident is caused by a driver who doesn't have auto insurance. Underinsured motorist coverage is designed to protect you when you are involved in an accident with a driver who has come insurance but not enough to cover the full cost of a claim. Thank you.